Welcome back to Investing with Confidence. As always, I am your host, Joshua David, having some fun here, talking about the do's, the don'ts, up markets and down markets with the stock market, opportunities in a positive way, both
Yep.
directions,
Mhm.
up and down. And that's some of the things that we really cover in these investing classes and explain in detail what that is, what the concept is. So that way our listeners have opportunities no matter which way this market goes. So that way you're protected in different ways, and just really being able to sleep at night knowing that it doesn't matter what the market does. You just want it to move. If you did happen to miss tickets for that investing class that we do right here in Bloomington, we have these on Saturdays. We also have these during the week. We even have these at night. So that way pretty much anybody can attend. They're 2 hours. The best part of it, they're free. Call in right now for two tickets plus the financial quick start kit that includes some free stock picks. 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. You get a text back. Make sure to click the link and pick a date for that class to make sure you get those free stock picks. So Al, you were talking in the last segment about, I think you said there was a pretty large percentage of the stocks in the S&P 500 that were actually down. And we've been talking about this
Mhm.
for quite some time about how the market has really been propped up by a select few high flying stocks, big movers, strong stocks. And what we're seeing with the market really turning right now, it is really driving these stock prices down that were already bad. So there's opportunities there, potential buying opportunities or potential shorting opportunities as it continues to go down. So let's talk about a couple of them here. Let's start with Moderna. I mean, that's been a
Mhm.
stock that I think a lot of people jumped into after, a couple years ago when it was in the news. You were seeing it everywhere, and it actually had a pretty decent move up, roughly about, I'd say about 130%. Well,
Right.
now Moderna down to roughly about 149 bucks per share, down about 72%
Yeah, from its high, right?
from its
And
high.
people are
Yeah.
Moderna is one of the vaccine manufacturers, so people, with all of the people that are getting vaccinated and getting boosters, I'm sure the thought is, well, that stock should be going up. What is that? What did I just talk about? Opinion. That's
Opinion.
someone's opinion. You know what? And it doesn't make any difference what your opinion is. To be honest with you, it doesn't make any difference what the stock is.
Yeah.
The important thing is to identify when to get into something and when to get out of something. And number one, you have to start by first of all identifying what trend a particular stock is in, and
Hmm.
accurately identify the trend. And then when does the trend start? When does it end? And that all comes with the proper strategy that helps you identify that. But it's all based on price. It's all
Yeah.
based on price action. And unfortunately, most people don't know how to properly identify those things. And Wall Street, if you are investing with an advisor, they really disregard price. They're
Yeah.
disregarding when you enter something, they're disregarding when you get out if you're wrong, and they disregard when to get out if you're profitable. Those are things that we teach our students. Get in at the right price, regardless of what it is that you are trading or investing in. That should give you the lowest risk entry with the highest profit potential,
Yep.
the highest probability of succeeding. And those are things that you should be interested in, should be concerned about. A lot of people now are going to be saying, "Don't worry about these corrections because the market
Yeah.
comes
You'll
back."
see that all over
Yeah, and
now.
it will, but in the meantime, you're losing all these opportunities
Yeah.
and you're making your portfolio work hard to dig itself out of a hole.
Yeah, and think about it. Moderna was actually up to about almost $500 per share.
Yeah.
And think about this: when someone was buying that, someone was selling it, and it dropped all the way down to 149. I mean,
You think
opportunities on the way down that people were benefiting on the way
Mhm.
down, where if someone bought at 500 bucks, they are losing as it goes down. So you just want to understand, as Al is talking about, those skills as far as where to get in, but also which direction that you want to
Mhm.
take. We're in a downtrend, a pretty big downtrend in Moderna right now, and it's just been getting hammered. But
Well,
go ahead.
think about that. That's almost $400 a share that
Hmm.
people have lost. How comfortable do you feel letting something like that happen, being told you should let that happen because it's going to come back. So
Yeah.
just wait. Sit back and wait while your portfolio is being decimated. please don't do that. There are ways of protecting yourself. And there's also a way you could have, if you knew the right strategies, you could have benefited from that drop in Moderna instead of
Yeah.
letting your portfolio being
That's the
different.
opportunity, Al, that you hit the nail on the head. That's the opportunity that people aren't seeing there. There was a beautiful opportunity as it went down, and it's
Yeah,
shorting,
right.
and we talk about that in these investing classes. We really cover that in the first section, but it's just benefiting in or having the opportunity in up markets. Obviously, everybody knows that, but also down markets. And if you think about it this way, if you have a car and you only had drive, you wouldn't get very many places. You would be driving in circles.
You
That's
have to go through the front of your garage or the back
yeah,
of your
that's true.
garage
Yeah.
just to get out of the garage.
Yeah, so you have a car that has drive. You have a car that goes in reverse. Same thing in markets. You have a market that can go up. There's strategies to benefit in up markets. If you have a market going down, say especially with Moderna, there's strategies for those down markets. But it's opportunities that most of our listeners are probably missing. Because if you think about it, a lot of people are looking for extra income in the markets, and if they're just buying as prices are going down, they're actually not making income. They're losing. But if they had strategies to profit in down markets, then they have more tools in their tool belt. And I know you talk about that in these investing classes that you teach here in Bloomington, Al, about how to have opportunities in up markets, have opportunities in down markets, but doing that with confidence. So I want to give away some tickets to an investing class right here in Bloomington. They're free. They're 2 hours, and we really dive into how the market actually functions, what it means to profit in down markets, what it means to profit at up markets, different ways to protect your portfolios. You can actually put insurance on your portfolio. I know we're going to talk about that a little bit more here, maybe in the third section. But if you have 401ks and IRAs, and you've probably lost, 10, 12% at this point, roughly. But why don't learn the strategies to protect that? So call 952-814-4410 for 2 tickets, or just text the word invest to the number 484848 for 2 tickets. Pick a date. You're also going to get those free stock picks, and actually gives examples and analyzes why a potential setup and how it's done, how that is. So we talked about Moderna, L. And what was the next one? I think we want to talk about GAP.
Yeah.
So let's find GAP. It's GAP is the symbol, and sitting at about, what do you have for GAP, Ray? Is it
I don't have the price. I just have the
14?
fact that it's down almost 60%.
Yeah, $14 per share, down about 54% as doing this show, as far as whenever you listen to it. So it's been, Gap is a good company, you would think. Clothing, they make great clothes. It was up to about 30. Now we're down about $14 per share. So what are you seeing with Gap here? Do you see that continuing to drop? We're in a major downtrend. What are your thoughts on
Well,
that?
you know what? It's interesting. The gap is in the consumer discretionary part of the market, and all of these stocks we're talking about that are down, they're in various sectors, different sectors. One of the things, I don't want to get off of what you had just asked me, but one of the things with the S&P 500, one of the reasons people are so interested in investing in that or something that's similar to it is that they feel they're diversified because there are 11 different sectors in the S&P 500. That consumer discretionary is one.
Well, those sectors are also getting hit right now.
All 11 sectors are down, and every time we have a major pullback in the market, that happens. Relying on that for diversification and relying on that diversification for protection is not working in these down markets. And one of the things that we teach our students is how to be properly diversified. But I think that we're looking at when you have consumer discretionary stocks like that, that is exactly what it means. People have the discretion as to whether they want to buy something from the Gap. It's not like more like healthcare. There are some things that are consumer staples that you have to buy, and even that sector is down. But and again, it doesn't make any difference what I think about Gap, and I don't care really about anything other than when it enters into an area where I feel there are a lot of institutional buyers that are going to buy it and drive it up, and where there are institutional sellers that drive it down. I don't care, and I think people need to get away from that, caring about what makes something go up or what makes it go down. Well, I'll tell you what makes it go
supply
up.
and
It's
demand.
buyers that make it go up and sellers that make it go down.
Yeah.
It doesn't make any difference if the Gap all of a sudden has a bad shipment of clothing or they can't get enough clothing in. Only the only way the stock is going to get impacted is if buyers do something or sellers
Yeah.
do something.
So our sponsor, Online Trading Academy, they have a strategy, Al, that's designed to follow the big banks and institutions because they actually drive price. So
Correct.
elaborate a little bit more on supply and demand and how that works in the financial markets, so our listeners can see, okay, the markets are actually fairly simple. You just haven't been taught the right way.
Well, that's exactly right. That's a good point. And this should actually frustrate and anger people. But Wall Street will put you into something that is a one-way, one-directional strategy, and it's a long-term buy and hold strategy. They're disregarding the price that you should get in. To do this properly, there are times when you should wait. You have patience to wait until price comes to an area where you have a better opportunity. But Wall Street disregards that price for the public,
Yeah.
but not for them.
Yeah.
Wall Street knows exactly what price to pay to get into something. They know exactly what price to pay to get out. They're participating when the market goes up. They're participating when the market goes down. But for their clients, it's typically disregard price, disregard the protection part of it, the profit part of it, and just look at it long term.
Yeah.
And that's not the right thing for everybody.
Yeah, you just made me think about something there because we have a lot of listeners that everybody wants more income, right? So they're searching for strategies and techniques in the markets. Well, what if somebody has a job and they work during the day? Can you still participate? Do you have to be at your computer to place trades and investments?
No, actually, if you are doing that, you're probably going to mess things up. First of all, there are assets that you can trade basically 24 hours a day.
Mm-hmm.
The foreign exchange market, called the Forex market, is one. The futures market is another one. And those are markets you're probably not being talked to about a financial advisor if you go in to talk about your financial situation. But those are the things that their companies are investing in. They're more short term. So if you're looking for income, if you have cash needs or money needs, let's say somewhere less than 10 years or 20 years, well, then you need to do something that's more of a long-term buy and hold strategy. And futures and forex are a great way. Those are great financial markets to participate short-term. Also, whether the market's going up or the market's going down, you can participate in both those directions with those assets. But the 24-hour trading is huge, and they have great leverage, which is a way of getting maximum production out of every dollar you have. And we're talking about leverage anywhere from 20 to 1 to over 100 to 1.
Yeah, so basically, the stock market requires a lot of capital because you need the physical buying power, which is the physical dollars, to purchase a stock, to purchase whatever that may be. Well, with futures and forex, what I was talking about is you can be more capital efficient, which basically means using less cash,
Right.
especially compared to the stock market. So, and that's I was teaching a class the other day, and we were talking about an article that I had just recently read, and it was like 60 or 70% of people that are not in the market feel it's because they don't have enough money.
Right.
Well, at the stock market, you need a lot of money. Why not being more capital efficient, using less cash, which gives you the opportunity to get started in these markets if you're not in it right now? But even if you are in it, why not learn those techniques and strategies to use less cash? My opinion, that's less risk because there's less dollars on the line, but it's
Absolutely.
protecting what you have too, and it's a strategy that's designed to follow the banks, institutions, but also protect your position so that way you can do it with confidence. And we were talking about earlier as far as do you have to be at your computer to make your trades and investments? You set it all up on a computer, obviously, but yet Al was talking about you wait for price to come to you, which where you want to be a buyer or a seller. Then the computer will actually execute it all automatically for you. We actually have a platform. It's called Click. It's a proprietary platform that Online Trading Academy has, and it'll actually walk you through the steps, and then the computer will execute the orders automatically for you, and really any broker will do that. So if you want to learn more about how to, place your trades and let the computer work for you, or use less cash, which is called leverage in the financial markets, in these investing classes, we go in detail what those are, why you might want to utilize that. So just call 952-814-4410 for 2 tickets for an investing class, plus some free stock picks. When you do that, you'll get that. You can just also text the word invest to the number 484848. You'll get a text right back with the link. Pick a date. You're also going to receive those picks there as well. Coming up next, Al, let's talk about Twitter and Viacom as we talk more about some longer-term wealth management. We'll We'll be right back.